I want to dive a little deeper into relative strength. And a critical part of this analysis is going to be these alpha bars. So if you type in Google TradingView Caruso Insights really quick, you'll see my ideas and charts come up. This is my profile here on TradingView. If you go to scripts, here's alpha bars. So you can click on alpha bars and you can add this to your favorites. It's free. I don't charge for alpha bars. So you can put this on your chart, and basically each day, this looks at your stock. And again, let's say the beta of a stock is 2. Let's bring up Celsius, for example. Let's say the beta is 2. Well, if the market is down, in this case here, 1.1%, and the beta is 2, you'd expect this stock to be down about 2.5%. So the fact that this fell only 0.89% means it fell less than it should have. So you see this alpha bar come up. It's delivering alpha. Alpha is when you outperform against your benchmark when you adjust for that beta. I won't go into what beta is. I've explained it before. You can also go onto the website. If you want a really deep dive, I'm not going to run through it, but if you go to services and you go to cars here, I have 2 kind of explainer videos where I really go into detail about how that functions and all that. But so basically, this is on a daily basis. Now, the cars indicator that I built uses this, and it basically incorporates different time periods into a composite number to achieve the best kind of output. And just very simply, instead of trying to analyze all of these bars, if you see this blue background, overall there's net alpha building net relative strength. I think that's the purest form of relative strength. Is not only are you beating the market, but are you beating the market more than your beta, your internal volatility of the stock. And so this does that very simply for you. But what I want to discuss tonight is what we're seeing is very unique in our stocks. Look at Wolf, for example. Look at these past 4 days. I mean, the market, again, let's make this a candle chart. It's rare that it's so obvious. I mean, this has really been an obvious 4 days of relative strength. But if you're following it, and all of us, it's in the portfolio, so I'm sure everyone's at least watching at least once a day to see how the stock closed. But if you're watching intraday, you would have gotten even more of a feel. This is what relative strength really feels like. And this is what led me to build the CARS tool in the first place. So, I mean, I was day trading for years. I still watch the market all day, even if I'm not day trading, because that's how I get my pulse on the market. But especially when you're day trading, you get a certain feel that is in the short term that is unique. And you build certain insights that you won't get if you just watch daily and weekly charts. But you need to be there all day doing that. But I remember I would trade these companies, and I'd be very industry specific or very stock specific for periods of times, and I'd be all over them. And before I developed these alpha bars and all these concepts and stuff, basically what you felt this week by watching, hey, the stock is not going down. 2 days in a row, 4 days straight of the stock not wanting to go. What is going on? And I would see that in different periods of time. And then the moment the market or whatever benchmark, let's say it was gold stocks versus gold or oil stocks versus oil, as soon as the underlying would just kind of finally stop falling out of bed every day and turn up a little bit, these stocks would explode, boom. And so at a certain point, I said, I got to figure out how to make this mathematically and build this, because it's just so important. And I was seeing this over different time periods happen, even short-term intraday charts, daily charts, daily periods. Obviously, daily was the more significant period. And this really shows that, but it's important that you understand how it feels. So for you being able to go through it now in real time, this is critical. And interesting, I'm reading that book, The Hour Between Dog and Wolf, and he explains how, trader instinct is a part of the brain that is one of the oldest parts of the brain that logs all of this environmental analysis that, your conscious mind is not even maybe aware of in real time most of the time. And when you're scanning all of your quotes, people say, well, what are you looking for? How do you get that instinct? Well, and he mentions it very well in the book. He says, basically, it's this older part of the brain that its job is to understand your environment. If you're in the wild and you're looking at the grassland and, is that a lion in that grass or is that just yellow grass? And that's the difference between life and death when you're in the wild. And so our brain has this functionality to look for what is normal and what's a small abnormality. And so a lot of what traders do when they call trader instinct, trader gut, is a lot of this relative strength on very short-term timeframes or over multiple days. And sometimes they can't articulate it and they can't say, I don't know why, but I need to buy this stock, or or some other pattern that they've seen. It's subconscious in their mind. They've seen it not once, not 10 times. They've seen it 100, 200 times. And they may not even know that they've seen it, but their brain has registered this as a pattern. So I think it's important that when you see this, kind of lock it into your mind and you try to really feel it. But if we go back to other periods of time, I want to show how this develops. Now, it's not always this obvious, but let's take a look at some other examples in different periods of time and how this is really hidden buying that's going on here. So let's take a look at 2020. Let's take a look at NVIDIA. So now NVIDIA, again, was one of the big winners here, just especially in terms of mega cap. This thing just took off and ran. One of the first, in terms of mega cap, this broke above its February highs way before the market did. In May, this was already making new all-time highs. The market took them months to get to that same kind of level. Now, take a look at how this stock, let me hide the volume here at the bottom, was performing at the market bottom. Market's falling out of bed every day. And let's just say you get long on this day. Took a real chance. You don't have to be there, even if you're just watching. Next day, the market goes up and wow, this stock really shines, really takes off. Next day, the market drops 5%. This stock drops, but hey, it just drops the same about the market. You still outperform. Next day, the market doesn't go anywhere, but wow, this stock advances 5%. Next day, the market crashes 5%. This falls, but only falls 3.3%. You can see the outperformance. The next day, the market falls lower again. Market falls 2.5%. What is my NVIDIA going to do? Is it going to fall? It's up 3.3%. And this is really, and then after, again, one more day, you see, oh, the market's up 9%. Great. But is my stock keeping up? It sure is. It's up 17%. Not only did it not fall during this 4-bar period, the second the market ticked up, this thing, you roared higher. Now, eventually that, there are some give back where, okay, it's so far ahead of the market, it takes a breather. But these periods like this, where there's this massive individual day relative strengths, that's really the footprint of an institution gobbling up stock, using that weakness in the market to really buy that stock. It's usually not so obvious. Certain times, because of the dynamics of the market and the strong desire to have that stock come together and you get this real outperformance. But when it comes, it's very meaningful. And so I want to show you these little abnormalities when they do show up, what it means, what it feels like, and then what makes the CARS tool so effective. So that was NVIDIA. Let's take a look at C as well, C Limited. Let's go back as well to that same period. And so it wasn't only NVIDIA that was really kind of feeling that very big outperformance. So take a look, same period down here. Market dropped on this day here, 11%. This stock, you thought it's going to crash. Nope, only falls 7%. Doesn't sound great. And that's the hidden accumulation part of it, because the stock is down 7% in the day. So anyone who doesn't know anything about markets will say, oh, awful day, my stock's down 7%. That's actually a phenomenal day for your stocks. It should have been down much more. Next day, we rallied 5% in the market. Now, when I'm talking percentages, you'll see the percentages right up here for the S&P and the percentages here for the stock, just so you can follow along. Next day, market advances 5.4%. Again, this outperforms at 7.74%. And this goes on. There's one day here where this, pretty poorly, where the market rallied. Well, it just didn't fall. It went up 0.2%. This fell 5%. But then you had 4 days in a row of strong accumulation. And so you could really see during this period of time here, somebody was doing a lot of buying. That wasn't the only time. Once we had a rally off the lows, and maybe it became obvious to some that C is going to be a big winner going forward in the e-commerce space. All of e-commerce was getting bought up like crazy. You can see here, while the market was just kind of going sideways, this was being bought. And you can see all of the relative strength come in. Now, this is more obvious when it's coming in on the upside. You can say, wow, my stock's up, three out of 4 days in a row, it's up substantially. So this is a little more obvious, but the real hidden accumulation is like when you see it down here with the backdrop of this weak market. So now 2020 is not the only time. Let's take a look at Viva Systems. Let's go to 2018. Here we go. So take a look here at how this market was breaking lower day after day after day after day. And look at this entire period of time, this entire down leg that took place starting from here. Almost every single day, the stock outperformed. Now, this alpha tool factors in the beta. So it factors in the stock's own individual volatility versus the S&Ps. There's another way to do it as well, like I talk about in the course. I call it AB relative strength. So another way to factor that in is like, hey, look, the market here from this prior low dropped substantially, huge drop. We went from, let's do some percentage lines here so everyone can kind of get a good look. So this fell about 10%. Over that same period of time, you look what the stock did, and this stock is flat, no change. So I call it AB relative strength. You can basically compare 2 points, point A and point B. And because you're comparing points in the chart, that automatically factors in for the stock's individual volatility and beta versus the market. So if this stock was really weak, this would have broken the prior low just like the market and just would have been an exaggerated version of the market. The fact that this didn't break the prior low when the market did is just screaming relative strength. And what's beautiful about that is it factors in the stock's own beta. Very, very important principle. And you can see here again, you had day after day after day after day. And this was really smart buying. This is someone who wanted a lot of stock and used every down day on the market as an opportunity to buy this stock. And again, why is it hidden accumulation? We'll take a look at this day here. The stock is down 0.9%. Just adjust that a little bit. So the stock here is down, where was I? 0.9%, but the market was down 1.5%. So anyone looking at their stock saying, oh yeah, market's down, my stock sold off today. Oh, no good this stock. I don't know what I'm going to do with it. In reality, someone was really in there accumulating that stock. And the second the market stopped falling, this kind of really turned around and took off. You can see actually on this low day here, market was down 2.6%, and the stock was only down 1.2%. So you had a huge alpha bar even on that very last day. And Viva, if you take a look here, what did Viva do after? We all know 2020, the historic runs, but I think a lot of us forget how great it was when Powell finally made that dovish pivot here, and Viva from that low tick where there was all that accumulation, whoever was that buyer down there had 121% gains in just about 6 or 7 months. So really, really powerful. Now, that wasn't the only one. If you're really paying attention during that period, go back to 2018. Here's Alteryx. So Alteryx has like an AI machine learning software. Again, using AB relative strength, the market's much lower over this period of time. What's this stock doing? It's actually slightly up. You could look at different periods. Take a look here. From this period here, the market's significantly lower. What did this stock do from that period of time? Well, we're even higher from back then. So you're showing this AB relative strength from different time periods on the chart. Similarly, this was a little more violent back and forth. You had a couple of days where it did underperform when it finally kind of gave up some of its outperformance. But take a look at this entire drop, and you'll just see how many significant periods of alpha that developed. Now, for the untrained eye, it will become difficult to say, well, there's some up days, there's some down days. Again, that's why I did develop CARS, because it factors that over different composites, and you get an easy to use blue background that will just signal when it's overall net accumulation, because it's not always so obvious. But there are periods of time, like you can look right here, 4 days in a row, 5 days in a row of buying, or even on this very steep drop, you maybe had one bad day, but you had some significant buying around that. So sometimes it's a little more obvious. We take a look at Team Atlassian here, a similar time period. Again, as the market was really going into free fall here, these last 4 days, look at this. This stock didn't even budge. And you can see 1, 2, 3, 4, almost 5 days out of 6 here of steady accumulation. What did this stock do after it was done, all of this accumulation? Let's take a quick look. This the smart guy who bought that low tick, 95% movement again, 6 to 7 months. What did AYX do? Let's just double check that AYX. I didn't check the price advance. If you were down here buying with the smart money, what did you have here? To September, you had a 200% rally. So these are significant things, but really the birth of these moves happen when nobody's looking, because if you got to buy a lot of stock, you got to do it intelligently. Now, this is not a new phenomenon. Let's go back to Apple. Let's go look to 2009. The last time we had that big crisis scenario here. Oh no, sorry, I put in the wrong date, 2009. Okay, so we'll see here, this is the March period when the market made its ultimate low, and we had that magazine cover from Time saying, end of our rope. But you'll see here, look at all of these bars here on this last leg down where we fell day after day after day. Alpha, 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 RS, relative strength, pop, 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 every day, all through this bottoming phase here, massive accumulation. And you can see that's what finally, boom, triggered the cars to come on. Let me make that background just a little bit darker here. There we go. So finally, there was enough net accumulation over this period that really finally got that cars to click on here, and we started our big advance. Again, what was the kind of advance that we got? If you were one of the smart buyers using that weak market to put on your position, 150% return in 6 months. Let's take a look at BKNG, booking.com over a similar period. And let's take a look at November 2008, actually. So this actually was doing it a little bit earlier. So you can see here, this is 08. This is when Lehman Brothers is going bankrupt and people are walking out of banks with their cases, with all their things on it. So awful backdrop. Take a look at this last leg down here. Look at all this accumulation. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, almost 3 business weeks of constant accumulation by some kind of institution. Again, happened on the backdrop, obviously, of good earnings. Someone said, wow, this is going to be a big leader. And they used this weak market as an opportunity to buy every single day. And there were down days in there, such as here and here, so you wouldn't have known it otherwise. Here, the stock fell 4%. Looks like a bad day. In reality, it was relative strength. Eventually, that led to cars turning on, and BKNG became a monster winner. You kind of zoom out, and if you were buying down here, you had 400% gains in, what's that, maybe a year and a half. Even if you waited for cars to finally show up, you had 270% gains in a little less than a year and a half. So very substantial. I'll bring up one last one, just an example. Let's go to Monster Beverage. I guess it's fitting since we have another energy drink stock that we're holding right now. Let's take a look here at October. So similar, look at this down leg we have here that developed in the market. Pretty substantial, 6%. I know nowadays that's just a bad day or two, but normal markets, it's a little more substantial. Look at all of this relative strength that develops at the bottom, day after day after day after day after day after day. And then finally, the stock was starting to weaken a little bit, and the cars turned off, but all of this positive relative strength got cars to turn back on before it really took off running. But you also saw it in terms of AB relative strength. So you can see the market made a much lower low. What did Hansen do over that period of time? Take a look at, let's say, the comparative low here. You're basically in the same place. Or if you take a look at a shorter term time frame, you have a higher low right here, and this made a substantially lower low. So you can look at different time periods to get your vibe for how much relative strength is building. Again, that was the basis, that was the accumulation, the genesis of this next major leg up, where this thing went up 400% in 7-8 months. So I mean, substantial moves. Yeah, you could buy it along the way. You could buy other points in time, but being attentive at the turn, having a good cost basis at that turn allows you to add much easier without being stopped, without being worrying about taking a 2 or 3 day profit and trying to build a substantial portfolio position that you can ride for these advances. Now let's take a look again with fresh eyes here at our current stocks. Take a look at Wolf. I mean, can you see that same kind of pattern developing? You had a few days of negative alpha here, but overall, this period of time, look at the substantial relative strength, especially these 4 days. Take a look at the AB relative strength. Look at the stock break lower. Look at this stock substantially higher over that period of time. Very positive. Again, the market may really break down badly here. I mean, we could just go break the lows and run into some kind of historic situation. I don't know. I mean, we're always data dependent, right? I mean, we're not predicting, we're interpreting. That's all we can do. But given the action, I'm trying to sniff out as someone doing a lot of accumulating, and it sure seems like it to me. Let's take a look at Enphase. Now, Enphase we've had for a significant amount of time. We first bought that here. Ever since we first started this membership back in March, this is one we spoke about during this entire period. I think now it's pretty obvious. You can see it screamed AB relative strength. Take a look at that. Bring that up here. Extremely powerful, extremely powerful. And you can see that AB relative strength is still continuing right here. Now take a look here at all of this positive alpha day after day. Boom. I think the only negative day was here. We had a downgrade by Guggenheim, if I remember correctly. So you had some downside action. I don't understand why people still chase to sell their stock just because of a downgrade. It's not as if it's actually negative news from the market, but I guess that speaks to the respect people give to analysts on Wall Street. And not that they're not intelligent people. I wouldn't immediately run out to sell my stock based on someone's opinion, but that's my approach. But you can see basically screaming over this entire time accumulation. Let's bring up Celsius Holdings. So this has been a little more dicey here lately. So this hasn't been as clear as Wolf and Enphase, but you have seen strong periods here on this right side where there's a lot of accumulation. Here, there's really a ton of accumulation way down here when we started our buying process, when we had this trend line break. And really through this entire basing period, you can see periods like back here and this period right here. And that's why cars turned positive way back here. Again, if you didn't have cars on, could have used your AB relative strength. Every time frame is really screaming accumulation going on. So people can look at meme stocks, they can look at this and that. I prefer to look at what are institutions doing? Is there accumulation? There's multiple ways you can dice that up, but you want to do that objectively. You want to do it clearly. I love the alpha bars, but they can get a little confusing unless there's a really strong pattern that's happening. That's how that basically turned into cars. And also AB relative strength is a great tool. Only AB relative strength takes a little more training in your eyes. That's why the cars tool is so nice that just pops up. Actually, I'm working with John to develop a tool that can kind of draw these lines in and highlight these AB RS lines, but still a work in progress. It's fun to always work on new projects, and hopefully we can get that done. John Mutchow's a great programmer. He's been helping me put all that together. We've been working on it together, and hopefully we can get that finished up. But I just wanted to really show the current time just how important it is what we're seeing. It's only 1 or 2 days, not just about, oh, what stock is up today with the market down. You want that pressure to build. You want over different time frames, and you want it in quality companies with big earnings, big sales, earning surprises, just like we had in 09, like I showed you with Booking.com and Apple and the rest and all those time periods. You tie all of that together. If we were to get some kind of market bottom to come in here, peak inflation happens and we see upside to be seen, but the groundwork compared to past massive winners is definitely present. And that's all we can go by is studying those footprints. So that's something I really want to cover today in terms of relative strength. I hope everyone enjoyed that. And with that, let's get to the Q&A session.